Right. The earnings parade continuing. As of this morning, we are seeing Johnson & Johnson, Goldman Sachs coming, but it's an investor day. And I don't know, there's something romantic about long-haul trucking for me, but I'd probably do it for about 3 hours and say I can't take it. But Frank Holland joins us now. We're going to hear from this XPO on Investor Day. Frank, do I romanticize it? Isn't there something about their modern day toward the Cowboys? Aren't they moving stuff across 3,000 miles?
Joe, I don't even know what to say to that. I think you're thinking about your old days watching reruns of BJ and the Bear or something. We're going to focus on the actual business here. Joined now by incoming XPO CEO Mario Harik. Mario, I don't know what this guy's talking about with the romance of trucking, but thank you for being here. I know you're a longtime executive with XPO, but this is your first Investor Day in the top spot. Thanks for making a minute to talk to us.
Thanks so much for having us on, Frank.
All right, so yesterday you did an early preliminary release of your earnings after the bell. Revenue slightly under estimates, but EBITDA in line or above estimates. Also, revenue per shipment up just about 7%. Can you give us a sense in the current quarter? What's the state of your business?
So we had a very strong quarter in the third quarter where our adjusted EBITDA, a measure of profit, came in stronger than expected. We had guided to 330 to 345 million of profits for the quarter, and we came in at 348 to 352 for the quarter. So we had strong results in our LTL business. Our pricing improved 7% on a year-on-year basis, and our volume trends accelerated in the quarter and flipped to positive on a year-on-year basis in September. And brokerage had record loads, record shipments that have gone up 9% in the third quarter as well.
All right, brokerage is the business you're going to spin off. But before we move on to other issues, I want to talk about these results, not only as far as they're coming up officially on the 31st, but what we're seeing right now. Are you continuing to see revenue per shipment up? Of course, we had that dire warning from the FedEx CEO about global volumes. Are you seeing similar softness in your business?
So for us in LTL, from a tonnage perspective, we're seeing an acceleration of tonnage as we head into the fourth quarter. But a lot of it is company-specific initiatives. We are investing in more capacity into our network. So we are adding terminals. We're adding more equipment to our fleet. We're adding more drivers. And we're also investing in our sales force. And that's leading to having more business wins in the second and third quarter. And we're seeing that tonnage trend accelerate like we saw it in the third quarter, every month of the quarter as well.
So you mentioned drivers, and I hate to reference another CEO of another company, but we had the CEO of Forward Air on CNBC last week. He said, in the U.S., we're short about 100,000 truck drivers right now. Are you having difficulty sourcing drivers? Do you have to increase pay, especially as we head into the holiday season?
So I'm incredibly passionate about this, Frank, because we have more than 13,000 drivers on our team. But we have a company-specific program, which is our driver schools. We operate schools out of 130 locations, terminals in our network. And this year, we're on track to graduate more than 1,700 drivers. And these are folks where we pay their tuition, they earn their wages as they're training, and then they join our ranks after they graduate from the program.
So it does sound like higher compensation, because you're also paying them while they're in school.
We are correct. So we are paying them as they go through school, and our wages are very competitive in the industry. And in the less than truckload business, our drivers get to sleep at home every day, so which leads to a higher retention of drivers, and it makes it easier to recruit drivers as well. It's still a tight market, but it's a bit easier for us in LTL and through our driver schools as well.
All right, we keep saying LTL. I want to spell out what LTL is. That's less than truckload. That's where different companies get to put a load on the same truck and get it shipped, as opposed to renting or buying their own truck altogether. When we had your former CEO, Brad Jacobs, on back in March on Squawk Box, he talked about this spinoff as getting rid of the quote-unquote conglomerate discount. He felt like XPO shares were undervalued. And in fact, right now, they traded about 8 times forward earnings compared to peers like Saia that trades at about 15 times forward earnings, and Old Dominion that trades at about 23 times forward earnings. What do you think this spinoff is going to do, turning you into a pure play trucker? What is it going to do to raise valuation and change how investors see this company?
So it's going to do a number of things. Number one is that we're going to have fit for purpose companies that are focused on one line of business that goes an inch wide and a mile deep. So when you have a focused management team on improving one business, you can have better results over time. The second thing is going to make the pure play comparison with our peers a much easier compare. So coming here on November 1st, we're going to spin off our tech-enabled brokerage platform, which will become called RXO. Fantastic company. And our LTL business, or less than truckload, is also a fantastic business. Both are coming from a position of strength to be industry leaders in their respective industries.
So before we let you go, some people are forecasting a recession. How do you see the potential of a recession shaping up the U.S. supply chain and also the freight market going forward for the rest of Q4 and also into 2023?
Yeah, so currently we are not seeing it in the results. So obviously strong results in the third quarter, where our EBITDA margin went up, or our overall EBITDA went up by 21 to 23% when you account for the sale of our intermodal business earlier in the year. That said, you are seeing mixed feedback from customers in terms of some customers seeing lower demand, other customers continuing to see strong demand. And we're modeling, depending what the economy does over the next year, we are modeling different scenarios of how we're going to perform in any market condition.
All right, Mario Harik, incoming CEO of XPO, we appreciate your time.